Peace and blessings, family. Welcome back to YBC University. Today, I'm about to be covering truth in lending and giving you guys an overview of, one of the most important subchapters, really the most important subchapter, and y'all gonna come to see why. I'm gonna elaborate. I'm gonna go in on this subchapter specifically. So make sure y'all definitely, whatever y'all doing, y'all locked in, and y'all give me y'all undivided attention within the time of this video. I'm gonna keep it under 60 minutes, so let's get into it. I really could break this whole sub chapter down and be here all day, but for the sake of time and for the sake of y'all studying, I'm gonna keep it within 60 minutes, less than an hour. So let's get straight into it. So truth in lending, first and foremost, it was dropped in 1968, right? May 29th of 1968. This is the publication, the public law of it. But if we understand what took place in the 60s as a whole with all the consumer, and I want you guys to go look up in history what took place in 1962, what took place in 1963, in 64, what took place, even during the time of Truth in Lending and when Truth in Lending came out in 68 and 69, some significant debts in which took place in those specific years alone, in which these acts and laws were being passed. But Congress and this subchapter alone is going to show you the power that we hold as consumers. So really pay close attention and really assert yourself differently after you guys fully understand the subchapter, because to know and to not do is to not know it all. So the name within itself says everything. Somebody was not being truthful while lending. So here's the truth, because somebody has been lying to you. So check me out. A, informed use of credit. Somebody already right away, they're letting us know, somebody's misinformed us on the use of our credit. Somebody's misinformed us on the definition and the true meaning of a loan, on the true meaning of a borrower. Nowhere in here, nowhere in the FDCPA, nowhere in the FCRA will you guys see the term loan or borrower defined, because there's no such thing as a loan or a borrower. But yet within your student loan, your contract, they're telling you about this loan and whatnot. Congress never defines a loan. They'll never define it in the definitions, and we're going to go over that. You guys will not see the definition of a loan, nor will you guys see the definition of a borrow. I always reference Deuteronomy 15 as well too. Go read it. So Congress finds that economic stabilization would be enhanced in the competition among the various institutions and other firms engaged in the extension of consumer credit would be strengthened by the informed use of credit. So right away, I want to talk about economic stabilization. Does anybody know what that means? Let me know in the chat box. Why are we talking about economic stabilization? And enhancing it. So I want you guys to check this out. An economy will be better with being informed. People consuming, is that a weak or a strong economy? People not consuming, is that a weak economy or a strong economy? If people are not consuming, it's a weak economy. If people are not consuming in a business, in a corporation, so it's not a business. It's going to go out of business. So the economic stabilization would be enhanced upon you properly being informed about the use of your credit. Right? The economy would be better with people consuming. More consumers, the better the economy. So when we hear and we see $1 million lawsuits of Equifax getting hit, of Chase, JP Morgan getting hit, all these banks getting hit by the CFPB. When we see them all getting hit, is that a good sign or a bad sign? Is that not letting you know where the economy's at and where it's headed? And that's all taking place right now in the economy in which we're living in right now. So that should tell you guys a lot about the economy in which we're living and operating in, at this current time. But if we were informed about the proper use of our credit, and if we knew, what I'm about to cover in this subchapter and what Congress covers in this subchapter, it will strengthen and it would enhance. And that's why in the Fair Credit Reporting Act, the congressional findings states exactly what it is. The banking system is dependent upon fair and accurate credit reporting. Read the first one in the Fair Credit Reporting Act. Right, so we got to understand that everything is commerce, and we got to understand that the more consumers, the stronger the economy. Let's see, I got some in the chat box. Back. So the informed use of credit results from an awareness of the cost thereof by consumers. It is the purpose of the subchapter to assure a meaningful disclosure of credit terms so that consumers will be able to compare more readily the various credit terms available to him and avoid the uninformed use of credit. Right? Will be able to compare more readily the various credit terms available to him, and remember this specific part. And remember why they talk about this. Because what if I told you guys they're supposed to compare different insurance companies that, are involved within and included within the finance charge? It says is verbatim under the definition of a finance charge, 15 U.S.C. 1605. And I'm going to show you guys exactly where. They're supposed to go over and tell you guys which insurance company that you guys can do business with, because the insurance is included within the finance charge, and it states that clearly within the definition of 15 U.S.C. 1605. And to protect the consumer against inaccurate and unfair credit billing and credit card practices. Right, so right here we got, and we talk about leases right here. So I'm not going to go too deep into this one, but just check out what Congress is stating right away within here as well too. Congress also finds that there's been a recent trend, right? It's only fairly recent, toward leasing automobiles and other durable goods for consumer use as an alternative to installment credit sales, and that the leases have been offered without adequate cost disclosures. It is the purpose of the subchapter to assure a meaningful disclosure of the terms of leases of property or for personal, family, or household purposes, as to enable the leasee to compare more readily the various terms available to him. Limit balloon payments in consumer leasing, enable comparison of lease terms with credit terms where appropriate, and to assure meaningful and accurate disclosures of the terms in advertisement. So check this out. This is how powerful you guys are. To undermine you, they begin to lease these cars out to you. All right, a consumer receives no equity because there's no finance charge involved. Anytime there's a finance charge involved, we receive equity. We have security interest, and I'm going to show you guys. And if you guys have your guys' contract out today, I'm going to show you guys how you guys gave security interest to these corporations. And it states that within your guys' consumer contract, under the truth in lending disclosure, it'll state that you gave security interest into this vehicle, into this property. In order to give something, you must possess something before you give something. All right, so drop a 111 if y'all gaining some information, if y'all gaining some value thus far. All right, so to undermine you once again, they begin to lease cars to you because the consumer receives no equity because there is no finance charge. So leases, they're just undermining you, because anytime you finance a car, it's already paid in full. It's already covered. In Canada, I always tell you guys, it's called a social insurance number. So now we're gonna hop into the definition section, and this what I always tell people is the most vital, the most important, you know, part when it comes to truly understanding all of this consumer law, all of this commerce and everything. If you're looking to truly understand and truly operate accordingly, go get you a Black's Law dictionary. Each subchapter you're using in any codes and or any UCC uniform commercial code in which you're dropping and giving, always know the definition of that subchapter in which you're referring to, because there can be the same word, but it can mean a completely different thing within the subchapter in which you're referring to. So y'all got to know the words, and y'all got to know what hats to wear and when to wear, hats, because the term creditor is defined under truth in lending and under the FDCPA, but they're different. They're slightly different. So y'all got to understand the definition of both of them and the difference between them. So first things first, so right away, the definitions and rules of construction set forth in the subchapter are applicable for the purpose of this subchapter. So right away, B, the term bureau means the Bureau of Consumer Financial Protection Bureau. The CFPB is your guys' best friend. All right, the same bureau that owns the CFPB is the same bureau. The same bureau that owns FBI is the same bureau that owns the CFPB. The difference is the FBI has agents. Now they got on the ground agents, and the CFPB, they don't have any on the ground agents. So who's the agents for the CFPB? Let me know if y'all know in the chat box. Who's the agents for the CFPB? Who knows? Who knows? Who knows? Come on, come on. So agents, I'll tell you what agents do if you don't know what agents do. They go out, they investigate, and they prosecute. They file complaints. Who has the ability to do so through the CFPB? Come on, we are. Us, the consumer. Obama put them in place in 2011. All right, so by default, you have the ability and the right to investigate, prosecute, and file a complaint. And everything you say is facts, because only you were present. Everything you say is facts because only you were present. Each complaint, it ain't done by anybody else, it's done by us. We're the ones investigating. We're the ones prosecuting. So we are agents of the CFPB. The difference is in why when the CFPB puts them on notice versus when we put these corporations on notice is because they come with power. They know exactly who they are. The next term, board, refers to the Board of Governors of the Federal Reserve System. Right, so many people talk about, and there's conspiracies that the Federal Reserve isn't even a thing, or a lot of people don't even know much about the Federal Reserve as a whole, and this is where our currency comes from. Nobody does know who does or who started the Federal Reserve, though, and that should really scare you, as nobody knows who, created our currency. They do state that it was, group of families and different bankers and whatnot, and we know the last names and stuff. I'm not gonna give them no power, but a lot of people state that those families and a lot of these families were the ones who had started it up, but they're not even a part of the United States corporation themselves. And the only reason why I mention is because it's under truth in lending. Right, it's under truth in lending. Y'all gonna come to see why. So stick with me and just realize and understand, that board, and this is second definition right here as well too. Right, the board of the governors of the Federal Reserve System. right? And then we got the term organization, and we know it means a corporation, government, or government subdivision or agency, trust, estate, partnership, cooperation. So this is not us. This is not a living person. This is just a piece of paper, an entity, a corporation. We know corporations. We know governments or government divisions. Also, we know trusts, estates. They're all pieces of papers. So we got to understand the definition of organization. It's a corporation, right? So anytime they refer to a corporation, that's an organization. Vice versa. Then we got the term person. Here, now we got the term person. It states it means a natural person or an organization. So we see the term, we just went over the term organization. Now we see that a person can be a natural person. And to be natural, you don't have to do anything. You came into this world as you are and living, breathing. You don't have to do nothing to, be you. Or is powerful. It gives power or it gives position. And it gives you the option and the ability to choose between both. Anytime you have the freedom of choice, that's liberation at its finest. Right. And remember, no organization can speak nor read for themselves. So we have the ability to act on the behalf of the person or the corporation. You can be one or you can be the other, or you can be both. That's how powerful you are. That's how powerful we are as consumers. Then we got the term credit. Credit is the right granted. So right away, is it a privilege or is it a right? Think about what it means to grant something as well too. Who knows what it means to grant something? Think about a grant when you get from, for school or something, or grants that you get for nonprofits. I know, that's something that I'm looking into heavy as I just started up my nonprofit. I'm looking my faith-based organization. I'm looking to go get grants. You need permission for a grant. Right, you need permission for a grant. You got to fill out this information and you get permission from the grant. And in order to be granted anything, you got to, have permission from whomever the other party is. So it's the right granted by a creditor to a debtor to defer payments of debt or to incur debt and defer its payments. So I want to talk about incur real quick. So incur is to assume a liability. To assume liability. But also what I want you guys to understand with all of these definitions, if they don't define it, it's not for you. So they don't define term debtor. Who or where do you guys see the term debtor defined anywhere in here? Stop me when you guys see it. So what does that tell you guys? It's not for you. That was not given to you. Does not define debtor. Anything that's not defined is not for you. If you want to see the definition, it'll be highlighted. So I'm going to read this again. The right granted by a creditor to a debtor defines a creditor though. Come on though. To a debtor to defer payments of debt or to incur debt and defers payments. That's how powerful y'all are. Now we're going to see that the term creditor comes after credit because in order for there to be a creditor, there's first got to be a person. And a person is who originates credit. And through a transaction, creditors are created. And in order to be a creditor, you got to come from a creditor. Creditors are creators, debtors are death. right? To credit something is to create, is more life. Debt, think about many people that have just alone taken their lives from being in debt. Right? Debt is death. And I'm gonna get into some more spirituality side of how credit is very spiritual. And that's why I take all of this very serious. Right now, I just want you guys to get a great understanding of the definitions of all of these. And I really want to give you guys just a different perspective and a different outlook, because we got other videos covering these within the university, within the mentorship. But I just wanted to come here with a different perspective and different just approach to, all of this, and you guys learning to, help shorten up that learning curve. So right here, the term creditor refers only to a person. It refers only to you, who one regularly extends, whether in connection with the loan, sales, or of property or services, or otherwise consumer credit, which is payable by agreements in whom in more than 4 installments, or for which the payments of a finance charge is or may be required. And 2 is the person to whom a debt arising from the consumer credit transaction is initially payable on the face of evidence of indebtedness, or if there is no such evidence of indebtedness by agreement, notwithstanding the preceding sentence. In the case of an open-end credit plan involving a credit card, the card issuer and any person who honors the credit card and offers a discount, which is a finance charge, are creditors. For the purpose of the requirement imposed under Part D of this subchapter in section 1637A5, 1637A6, A7, B1, B2, B3, B8, B10 of the title of the term creditor shall include card issuers, whether or not the amount due is payable by agreement in more than 4 installments, or the payment of a finance charge is or may be required. And the Bureau shall, by regulation, apply the requirements to such card issuers to the extent appropriate, even though the requirements are by their terms applicable only to creditors offering open-end credit plans. Any person who originates 2 or more mortgages referred to in subsection AA in a 12-month period, or any person who originates 1 or more mortgages through a mortgage broker shall be considered to be a creditor for the purpose of the subchapter. Come on, y'all. The term creditor includes a private educational lender, as the term is defined in section 1650 of this title. The purpose of this subchapter. So I got a couple notes written down here. The term creditor is given permission. Credit only refers to a person to give permission to give you credit. Right? In order to even give permission, you gotta be able to speak. None of these corporations can even speak for themselves. They're pieces of paper. So you sold them credit, and they sold you a contract. In other words, you sold them credit and they sold you a contract. And the security interest that you have given, once again, within the contract, go look at your guys' auto loan contract right now. A lot of times it'll say that you gave security interest in this property, or it'll say that the security interest you have given us, ... They've been compensated. They're letting you know in their contracts, in their deceiving and misleading contracts. That's why within the FDCPA, 15 USC 692E, we got false and misleading, information. So we gotta understand, y'all. Once again, they've been compensated, they've been paid in full, and I'm gonna show you how, and I'm gonna show you guys why. Through the credit sale, how they've been paid in full because of our open-end credit plan. And our credit card, in which we use to obtain the car, paid for it with our open-end credit plan. And that's why they define the open-end credit plan before they define the term credit card. Because in order for there to be an open-end credit plan, we got a credit card, we got to even know what an open-end credit plan is. And that plan is attached to our credit card, and that allows us to contract unlimitedly. We have the ability to contract with any corporation. That's why when we ever get denied, we're just being discriminated against. And for us being discriminated against, we can hold them liable with adverse action. And that we covered within the Fair Credit Reporting Act overview. And we got videos covering that specifically alone as well too. So drop a 333 if y'all with me thus far. Drop a 333 if y'all with me thus far. We're gonna get into some more information, some heavier information. So bear with me. So the term credit sale refers to any sale in which the seller is a creditor. The term includes any contract in the form of bailment or leasee if the bailee or leasee contracts to pay as compensation for use a sum substantially equivalent to or in excess of the aggregate value of the property and services involved, and it is agreed that the bailee or leasee will become, or for no other, or a nominal consideration has the option to become the owner of the property upon full compliance with the obligations under the contract. So once again, they create a contract, deceiving you and misleading you through that credit sale. So now the term consumer, in other words, means personal, family. I'll go over that right here. Used with reference to a consumer credit transaction characterizes transactions as one in which the party to whom credit is offered or extended is a natural person, so it's me and you, and the money, property, or services which are the subject of the transaction are primarily for personal, family, or household purposes. So that's what, your credit is meant for. So there should be no poor people walking amongst us. Deuteronomy 15. Personal, family, or household purposes. But we've been deceived our whole lives. How you think they got the land from the American Indians? Deceived them, got them in debt, got them in these contracts. They didn't understand the definition of these words that were used within these deceiving contracts. I'm learning this language right now that's breaking down each contract treaty for the past 8,000 years that's ever been written up worldwide, no matter what language. It's all fiction. It's all fictitious and it's all misleading and it's all deceiving you. That's how powerful you are. What if I told you that I am, that you are? Not even I told you, scripture tells you hundreds of times, I am. But yet we still hoping, yet we still begging and pleading. We got to start operating in power, y'all. We got to start operating in our highest self. We got to start exerting our light a lot more than which we are, y'all. And especially in the time in which the world is, headed and things that are taking place and things that are coming to light. We got to shine our light and we got to understand who we are. And we got to understand that each one of us is connected. We're connected to every single one, every person out there, connected to everything, but attached to nothing. But we're all connected to each other and we're all a reflection of one another. So, and there's duality to all of us, but go out and spread your light, because I believe I had posted this earlier, but no amount of light can make the darkness flee, but even the smallest bit of light can make the darkness flee. So stay the light, stay bright, and remember, I am always. Whatever you put after that is what you are and what your reality is. All right, so now we got to open a credit plan to talk about I am. This right here, in other words, is no limit. There's no limit on what could be spent. No limit on what could be spent. The term open-end credit plan and open-end consumer credit plan means a plan under which the creditor reasonably contemplates repeated transaction which prescribe the terms of such transactions and which provides for a finance charge which may be computed from time to time on the outstanding unpaid balance, a credit plan or open-end consumer credit plan, which is an open-end credit plan or open-end consumer credit plan within the meaning of the preceding sentence is an open-end credit plan or open-end consumer credit plan, even if credit information is verified from time to time, even if information is verified. Even if they want to verify any information. Now we got the term adequate notice. I love to use this with the charge offs, and y'all will see why in a second. It means a printed notice to a card holder. We're gonna go over a card holder here in a second, which sets forth the pertinent facts clearly and conspicuously. How many of you guys were set forth the pertinent facts of the billing, of the whole contract, of the payments, of everything, of y'all will see in a second your right to rescind, clearly and conspicuously, so that a person against whom it is to operate could reasonably be expected to have notice and understand its meaning. Such notice may be given to a cardholder by printing notice on any credit card. So remember the definition of a credit card, or on a periodic statement of account issued to the cardholder, or by any other means reasonably assuring the receipt thereof by the cardholder. So if they didn't clearly and conspicuously set forth the pertinent facts, they didn't give proper adequate notice. And you define it because Congress never defined it. The term credit card now, it means any card which the cardholder has requested. Oh, wrong one. I was about to say that is not it. Any card, plate, coupon book, or other credit device existing for the purpose of obtaining money, property, labor, or services on credit. I want to ask you now, did they mention any banks? Let me know what banks y'all see on there. Did they mention a plastic card? Can you guys go out and obtain services with your Amex card? Can you go get your lights turned on? Can you go get your water turned on with just an Amex card? Let me know, y'all. What's the one card that they need? Come on, y'all. What's the one card that they need? A social security number. That social security number. Come on, y'all. So when you get pulled over and the first thing they ask you for is license and registration, and they go run your license. What if I told y'all that the finance charge arose, and the finance charge is the sum of all charges? Y'all gonna come to see that here in a second. And the finance charge has been covered and has been paid in full by the SSK V Trust. So I want you guys to understand, you guys are all already multimillionaires. You guys already are multi-billionaires. We just got to start asserting and tapping into ourselves, tapping into truly understanding the definitions, truly understanding the meaning behind each word, the etymology of these words. Right? Cursing. It's truly cursing and casting, and you're cursing your own self, your life. Spelling is literally casting a spell. Oh, y'all. So now we got the term accepted credit card. Any credit card which the cardholder has requested and received, or has signed, or has used, or authorized another to use for the purpose of obtaining money, property, labor, or services on credit. So I want you guys to pull your license, pull your guys' social security number out. pull out your credit card. On the back of it, what does it ask you to do? And your social security card, what does it ask you to do on your passport? As you sign here, right? Once it's signed, it's now an accepted credit card. So that's an accepted credit card. Now we got the term card holder. Any person, right here, I'm gonna stick in, Congress defines it. So, and once again, we have the ability to operate on the behalf of either the natural person or the corporation. For this specific moment, I'm gonna, act on behalf of the natural person who issues a credit card on, or the agent of such card. What was I on that one? Card holder. No, I was like, yeah, I'm not on this one. Card holder means any person to whom a credit card is issued or any person to whom has agreed with the card issuer to pay obligations arising from the issuance of a credit card to another person. So what I want you guys to ask yourself is, once again, I'm gonna go with the natural person, so me right here. So any person who has agreed with the card issuer. Who agreed? Right, so when I ask who agreed, what I want you guys to go study is go study the Emergency Banking Act of 1933. Go study House Joint Resolution 192. Go look up the confiscation, and we've done calls going over this as well too. The gold confiscation of 1933 and how this took place after the Emergency Banking Act and how the feds were, taking the gold and stealing the gold from consumers nationwide. They stole our gold and they replaced it with fiat. And you know what came 3 years after that? The Social Security Act of 1936. Right, the Social Security Act of 1936. And why do I state that? Because we became collateral of the debt of the United States corporation. That's why they created the Social Security, the Sescade V Act of 1666, in which I'm referring to, the Sescade Trust. They created a legal fiction entity to represent and to present you, the natural person, when we are not. And we got to, once again, and that's why the definition of a person is as such, because we can act on behalf of this legal fiction, or we can act as the natural person, in which we have God-given rights and a supreme law that supersedes all of these laws, in which supreme law is natural law, common law. That's why they steal these laws, and they use these, not even steal, they used scripture to create these laws. They used, scripture of the Most High, and these books, these stories, I should say, the Bible, the Torah, the Quran, all of them come from other, stories and tablets that, have been told many, many moons prior to, the date and the release of any of those teachings and books. Dates back to esoteric knowledge, into the Atlanteans times, into Thoth, and y'all got to look into the Emerald tablets. Talk about truly knowing thyself. But they're the person above all else who agreed with you. Right, they're the person who agreed with you. So, the term card issuer means any person who issues a credit card, or the agent. Who's the agent? Define an agent now. Agents are authorized to act on behalf of somebody else. So we're going to read this again. Any person who issues a credit card, or the agent of such person, with respect to such card. And right after agent, they define unauthorized use and how they use our credit without authorized use. As used in section 1643 of this title, it means the use of a credit card. We know what the definition of a credit card is, right? By a person, we know the definition of a person other than the cardholder. We know a cardholder, once again, for any person, a natural person, like we had talked about, and other than the cardholder who does not have actual implied or apparent authority for such use and from which the cardholder receives no benefit. So I want to break this one down. See, I got a couple things. Boom. The use of a credit card. So remember what a credit card is. Apparent authority. And from which a cardholder receives no benefit. So I'm gonna give you guys an example now. If you go do business with Santander and there was a finance charge and you are still paying monthly bills, knowing there's finance charge, that's unauthorized use. And I'm gonna show you guys why right after this. Because we're the card holder and we're receiving no benefit. Are any of you guys benefiting from paying monthly? Ever? Are you benefiting from paying monthly your card note? We were just talking about this earlier on the call today. I said, bro, don't worry, I got you tonight. We better cover all this. So these agents are unauthorized. I'm trying to think of how to put it into a sentence, but the unauthorized use of our credit has affected our livelihoods. How? Explain. Talk about the damages that have been done. And we'll get into the definition of a finance charge and how, once again, if a finance charge is involved in the transaction, which we know it's involved within every consumer credit transaction, and you're paying monthly, that's unauthorized use of your credit. Scam, receive no benefit. We gotta receive benefit. What if I told you guys going to school? We all should have been receiving benefit. Because what did they use in order for us to get to school? Our credit card. Now we got the term discount. As used in section 1666F of this top. These ones aren't even really vital to knowing. These extra ones down here. Great to read through and just be familiar with. As far as consumer getting anything off your report, that will be good with those definitions. Definitely study through and watch a recording of each of these as well too. So I'm about to dive heavy into the finance charge right here, and this will help you guys even with the last definition I just talked about. Right here though, is the determination of a finance charge. They're letting us know in right away we're thinking this was determining the finance charge. It really is defining a finance charge. So check this out. That's why it's important to really actually read these laws and not just the title of or the name of the certain act. So the amount of the finance charge in connection with any consumer credit transaction shall be determined as the sum of all charges. Y'all let me know what it means to be the sum. What does it mean to be the sum? Means to be the total amount payable directly or indirectly. Why are we talking about directly or indirectly? By the person to whom the credit is extended and imposed directly or indirectly by the creditor as an incident to the extension of credit. The finance charge does not include charges of a type payable in a comparable cash transaction. So right away, they're letting us know down payments are not legal. Down payments should not be included in the consumer report. Cash transactions, you get a cash receipt anytime you put down a down payment. Go look at your paperwork with the dealership. It's a cash receipt. There was another word in here as well too. Payable directly or indirectly, or imposed directly or indirectly by this. Okay, right here. So imposed directly or indirectly by the issuer of a creditor as an incident to the extension of a credit. So incident in Black's law, the definition of incident states and means inseparable. So it states the payments should not be separable. So they should not be separated. Also, other cash transactions in which they'd refer to outside the down payment, monthly payments as well too. But yet you're still paying it. And that doesn't mean, and you guys hearing this, do not stop paying any bills just because now you know this information. You gotta assert yourself and you gotta apply pressure to these corporations and you gotta hold them liable. And if not, silence is admission. As I always say, the finance charge shall not include fees and amounts imposed by a third. So this is for anybody that has a mortgage. Check this out. Shall not include fees and amounts imposed by third-party closing agents, including settlement agents, attorneys, and escrows and title companies, if the creditor does not require the imposition of the charges or the services provided and does not retain the charges. Examples of charges which are included in the finance charge include any of the following types of charges which are applicable. So check this out right here. Talks about right away interest, the price differential, and any amount payable under a point discount or other system or additional charges. So interest would be, your APR, your monthly payments, service or carrying charge. So if you ever got your car delivered to you, that's included in the finance charge as well too. Loan fee, finder's fee, or similar charge. Never, and right here specifically, they don't define a loan, do they? Do they define any of this? No. All right, so they're not out here. They do not define a loan, nor do they define a borrower. Then we got right here, premium or other charge for any guarantee or insurance protecting the creditor against the obligor default or other credit loss. So insurance is also, this is all things in which are included in the finance charge. Insurance is included within the finance charge. 6, borrow paid broker fees, including fees paid directly to the lender. So 5B talks about life, accident, or health insurance premiums included in the finance charge. So it's letting us know right then and there, it's included in the finance charge. Charges or premiums for credit, life, accident, or health insurance written in connection with the consumer credit transaction shall be included in the finance charge unless the coverage of the debtor by insurance is not a factor in the approval by the creditor of the extension of credit, and the fact is clearly disclosed in writing to the person applying for or obtaining the extension of credit. But yet they're telling you that you gotta have credit in order to leave the dealership. It's not a factor in the approval by a creditor of the extension of credit. But yet they're letting you know that you must have it. And then number two is letting us know, in order to obtain the insurance in connection with the extension of credit, the person to whom credit is extended must be given, what I tell you guys at the beginning. Wait, it's gonna come full circle. What I was talking about at the beginning, when they must actually be telling you guys which insurance companies are included within the finance charge, and that you are able to do business with because it's included within the finance charge. They should have a whole list in which they're doing business with. But at the same time, we got to understand that they are only regular people that are out these these car these dealers, not the dealers, the people who work at the dealerships. Can't think of their name right now. People who sell the cars are just regular people, and they're not familiar with the law. So we gotta show them the law, and we gotta be able to break it down and interpret it to where even a first grader can, understand and be able to, break down and comprehend this. So when you go apply and finance your car, break down how it's included within the finance charge. So next, that's a great breakdown of 1605. Now I want to talk about, and for them having you put down a down payment, we can hold them criminally liable, right, for willful and knowing violation, right? Willful and knowing. So they're doing this knowingly, right? They're doing this willfully, like they're doing this. They know this, but they're still doing this, right? They are fully aware of this, but they're fully taking advantage of consumers who are not aware of this and who are being deceived and who are being misled. Well, I guarantee you guys, any dealership that you guys go to is familiar and with truth in lending. They must abide by truth in lending to even be in business. So right here, gives whoever willfully and knowingly gives false or inaccurate information or fails to provide information which he is required to disclose under this provision, required to disclose, or any regulation issued thereunder. Number two, uses any chart or table authorized by the Bureau under section 1606 of this title in such a manner as to consistently understate the annual percentage rate determined under section 1606. Or number three, otherwise fails to comply with any requirements imposed under the subchapter, shall be fined not more than 5,000 or imprisoned not more than 1 year, or both. So right away, we're not even talking about holding them civilly liable. Right away in truth and lending, they're letting us know, Congress is letting us know, and they're letting it be known that they're going to be held criminally liable, not just civilly liable and run me my money, but criminally liable, in prison, if you're not taken serious and for the violation upon, anything that's not been disclosed to you, and things in which are required to be disclosed under this provision, or false or inaccurate information. I call and ask any, dealership the definition of a finance charge and see what they'll tell you. It's inaccurate. Hit them once they have you guys put down that down payment. Extra 5 bands. Finance charge was 20,000. So I'm going to show you guys where not only can you get double the finance charge, but you can also get 5,000 on top of getting your down payment back as well too. So if y'all want to get y'all down payment back, 5,000 for a down payment as well too. I'm going to show you guys where now you guys can go ahead and rescind the whole contract. So check me out. And then I'm gonna show you guys another place and where we can have them run our money. And then I'm gonna show you guys one more thing when it comes to the down payment. So right of rescission. This is one of my favorite codes within all of the subchapters. Except as otherwise provided in the section in the case of any consumer credit transaction, including opening or increasing. So right here, they're talking about as to certain transactions, but then right here is letting us know in the case of any consumer credit transaction, including opening or increasing the credit limit for an open-end credit plan in which security interest, including any such interest arising by operations of law, is or will be retained or acquired in any property which is used as a principal dwelling of the person to whom credit is extended. The obligor shall have the right to rescind the transaction until midnight of the third business day. So boom, right away we're thinking, dang, we only got 3 days to go ahead and rescind this. Not true, because right after this, they let us know, or the delivery of the information and rescission forms required under the section, right? It's not something in which that they might have to do, but it's required that they provide your rescission forms, and rescission forms are allowing you to rescind the whole contract. Why would they give you the rescission contracts and put you on notice and let you know about the your right to rescind this contract? How many of you guys have been given your right to rescind contracts or have been disclosed? And if you have, have you been clearly and conspicuously disclosed on your rescission forms and how to, rescind the forms and whatnot? Have you even been given those forms? If not, you know, you're being violated in pursuant to 15 U.S.C. 1635A. And I'm gonna show you guys what to do and how to return, the property and keep, how to return the contract, how to rescind the contract and keep the property. Under the section together with the statement containing the material disclosed under the subchapter, whichever is later by notifying the creditor in accordance with the regulations of the Bureau of his intents to do so, the creditor shall clearly and conspicuously disclose in accordance with the regulations of the Bureau to any obligor in a transaction subject to the sections, the rights of the obligor under this section. The creditor shall also provide in accordance with the regulations of the Bureau appropriate forms of the obligor to exercise his right to rescind any transaction subject to the section. So once again, we have the right, and they're obligated to, provide our rescission forms. And if they don't provide those rescission forms, we have the right to rescind, that whole contract. So quick overview, and it's once again is any consumer credit transaction. The title talks about certain transactions, but it's any. Also, let me see. Once again, we never received those forms. We got to receive those forms. And we got to understand that they withheld these forms. We were never given our right to rescind. So how are we going to exercise it? So that's going to be B right here. So when an obligor exercises right to rescind under subsection A, he's not liable for any finance charge or other charge in any security interest given by the obligor, including any such interest arising by the operations of the law, becomes void upon such a rescission. Within 20 days of receipt of a notice of a rescission, the creditor shall return to the obligor any money, property, and once again, check this out. He's not liable, so not liable right away. Within 20 days after receipt of a notice of a rescission, the creditor shall return to the obligor any money or property given as earnest money, a down payment, or otherwise, and shall take any action necessary or appropriate to reflect the termination of any security interest created under the transaction. If the creditor has delivered any property to the obligor may retain possession of it. Upon the performance of the creditor's obligation under this section, the obligor shall tender the payment property to the creditor, except that if the return of the property in kind would be impracticable or inequitable. So this is the most important thing is what to, as you do go through and rescind the contract ever, you want to make sure you state how it would be impractical or how it would be inequitable to you, the consumer. And you decide. It would be inequitable and impractical because I help take my little brother to school, to and from school. And if my car was taken, he would have no way of getting to school. I take my car to and from work and I need to work my job to make sure I, pay the bills to, keep the roof over my head. Tender shall be made at the location of the property or at the residence of the obligor, at the obligations of the obligor if the creditor does not take possession of the property within 20 days. After tender by the obligor, ownership of the property vests in the obligor without obligation on this part, pay for it. The procedures prescribed by the subsection shall apply except when otherwise ordered by a court. So now I'm gonna take you guys here to right here in 15 USC 1640, holding these corporations liable. So within each transaction, there's something called a truth in lending disclosure. How many of you guys are familiar with this table right here? Drop a 111 if you're familiar with this table. Drop a 111 if you're familiar with this table. Because if you're familiar with this table, you'll understand that it defines finance charge. Let me see. Right, so this is the finance charge. It's also going to tell you the amount of finance. The amount of finance read under it states the amount of credit provided to you on your behalf. And it's covering the finance charge. Showing you and letting you know that it's already been paid. This is paid in full. Total payments, you put down a down payment, put down the APR, 27,000. Finance charge is 10,000. Amount financed was 14,000. They got paid and some, but yet they're still gonna collect monthly. So once we can come here and break this down, you guys, we can see that the fraud that's taking place. This one, this security interest, this is what it will look like as well too, but it will state that you gave security interest to whomever, but this one's very deceiving. We will have a security interest in the vehicle being purchased. So if it's being purchased, how are they getting it and who are they getting it from? Like this one, this isn't a common one in which you'll see, but mine went over earlier on the call. So just to reference back to that and help full circle everything with that security interest and that table I was talking about earlier. This is exactly what you guys are going to look for on your guys' contracts. Go read the security interest part. Go look at your finance charge. Double the finance charge we're talking about now, receiving. So say your finance charge is 10,900. Now we talk about run me my money. This is really run me my money right here in 1640. And keep in mind, this can go for not only like heavy auto loans and mortgage loans, but this goes for anything that's on your report, a charge off, anything that's on your report, it don't matter. Like once you get it removed, deletion is admission. So you can go hit these corporations with this as well too, because there is a finance charge in your auto loan, in your, credit card agreement as well too, and contract as well too. Like y'all don't even come to truly understand that like there's a finance charge in every consumer credit transaction. Anytime you use your credit card, there's a finance charge. So you can hold them civilly liable, double the finance charge for every time your credit has been misused. Talked about the informed use of credit at the beginning of Truth in Lending. So now if we were properly informed, we would know that everything's already been paid in full, that the finance charge is the sum of all charges. that there is no such thing as a loan nor a borrower within truth in lending. So we're gonna hit them and we're gonna hold them civilly liable. And we know any actual damage can be, I mean, only you know. And that's why Congress doesn't define it. Right, so any actual damage, you define the damage that's been done to you, whether it's affected you from going out and acquiring a mortgage and putting a roof over your head, that's the damage that's been done. And through that, I mean, maybe it had you lose a job and lose equity of, who knows how much yearly, annually, and I mean that's, yeah, you know the damages. So you go out and you go seek whatever damages you feel, can fulfill the need or fulfill whatever has been damaged. And then it also talks about right here in the case of an individual action twice the amount of the finance charge in connection with the transaction. So any violation in this subchapter, that's twice the violation. That's twice the finance charge. So if your finance charge is a $10,000 credit card, that's 20,000 right there. The credit card's already been paid off and it's already been paid in full. They deceive you, with these monthly little payments, but that's why I teach y'all how to just leverage the FICO credit scoring system, show you guys how to, liquidate and stack these credit cards. But yeah, I mean, there's a finance charge involved with those as well too. It's not just auto loans. Like really break down and demand that consumer file, demand that audit trail. Through there, you guys will see a finance charge. Demand that file from these student loan lenders. You guys will see the finance charges involved, and the finance charge is the sum of all charges. So now I'm going to take you guys here to one last thing for the down payments. 15 USC 662. And this is an advertisement, the advertising of down payments and installments. So it talks about no advertisement to aid, promote, or assist directly or indirectly any extension of consumer credit may state, number one, that a specific periodic consumer credit transaction or installment amounts can be arranged unless the creditor usually and customarily arranges credit payments or installments for that period and in that amount. Number two, that a specific down payment is required in connection with the extension of any extension of consumer credit unless the creditor usually and customarily arranges down payments in that amount. So the only way they can do so, let's say me and Jess go in and we both get, a new Mercedes-Benz C-Class C300. We go there, we get that C300. Once we get that C300, we both got two different down payments in which we got to put down on it. This should show us how a credit score and how credit scores in the FICO credit scoring system is all a game. It's all a game. We're going there both with the credit card and open-end credit plan, but we're both paying two different down payments. The only way they can, have people pay down payments is if they customarily arrange credits for that period and in that amount. Otherwise, it's a violation of 15 USC 1662 and overall in general, understanding 1605, we understand that there should be no comparable cash transaction. So that's the main thing right there when it comes to truth in lending. That's really the main, I would say, codes y'all got to really go through and hone down on and get familiar with. We're going to be doing, and I'm going to do other calls breaking down different sub chapters within the university and just within the mentorship as a whole. So you guys can get more familiar with it. Those are the most important parts, I would state, within truth in lending, and truth in lending is the most vital sub chapter. So y'all just got some really heavy information. So definitely go through and continue studying this information. And remember that it's a marathon. So brick by brick, we're gonna keep building. And before we know it, we're gonna look back and we're gonna have a whole city, a whole community, from the bricks in the foundation in which we have laid down, 1% a day. That's our approach. So we're gonna keep getting to it. All right, check this out. Like I talked about, the Consumer Law Act took place in 1962. It was passed by JFK in 1962. So then we come here and we see what who passed away a year later. My man JFK, same one who passed the Consumer Law Act. Then we come here in 68, and if we know that really a lot of MLK's movement and information was about, consumers and understanding truly, me and truly who we were. And I would love to do a call just going in depth, specifically elaborating upon that. That would be great for you guys. Robert Kennedy as well too. I'm just looking right now at this point. But the main person in 68, the same year Truth in Lending was passed, was my guy MLK. And if you know, you know. And if you don't, you're gonna know soon. Just stay plugged and I'll do a call on it real soon. So now let's look up 1974, I believe that was in the FCRA. Let me see. $1970. Hmm. Hmm. Not really anybody for the FCRA. I believe it was 78. The FDCPA was passed. Who am I gonna judge? US Vice President. Come on now. JD Rockefeller. Come on now. I didn't even know that. Same year of the FDCPA. So I say this to say there's a method to our madness, and stay ready so you ain't gotta get ready. Especially with this information we got access to and that we taking action on. What's in the light always gonna come to dark. Stay ready so you don't gotta get ready once again. 10 toes. Let's get it. Peace.